Hello everyone, my name is Marcello Kolax and today we're going to have a look at the week starting 28th of August 2023, and that was quite a week for European energy markets, quite a shocker. So let's start with the TTF, then we'll have a look at Brent, and then we will have a look at carbon. Alright, with the TTF, once again, I always like to zoom out because these weekly videos are always a good opportunity to just not be too overwhelmed by what is happening here, but simply seeing where we are in relation to everything. So we did have this ginormous uptrend from 2020 to 2022, and we have since come off. And the first thing I do here is I put in, ignore all the other things that just popped up, I do put in the Fibonacci retracement levels just to see how far this down leg has retraced from this preceding uptrend. So we are more or less at the 61.8%. Yeah. We hit it more or less quite nicely, and that is usually the standard extent of a good solid correction. Anything below that to the 78.6 would then probably undo this entire trend. Okay, so let's see. We have been moving within this descending channel for the longest time, which is defining the longer term downtrend. And you can see we did break above it for 2 consecutive weeks now. So let's have a look at what's happening on the daily chart. Okay, so old news, we had the triangle, and then you might remember, so I always like to leave on the markings from last week so we can update our thoughts. So we did break above this triangle with the announcement of potential strikes in Australia for the LNG markets, and this triangle then gave us a target near 56.57, which also coincides with the 200-day exponential moving average. So we assumed that the market will probably pull higher to here. This was all clear. We did form higher highs and higher lows. Yeah, so the market is moving, swinging higher. And then we had this 1 week, 1, 2, 3, 4, 5. We had 2.5 weeks of a little bit of a sideways trend. But ultimately, the idea was still the trend is in place until it's not, which is correct. So I said, as long as we're in the sideways range, we are most likely to push higher. If we break lower, however, we will likely see 26.34 happening. So where are we now? Oh, by the way, one more thing. We also saw this here is not my stops. Yeah, just last week I put on all these levels to show where other traders might have put their protective stops or like entry or well, yeah, I can't imagine anyone being short here, but entry stops potentially. Or yeah, exit stops. So anyway, this here could be a little bit of a thick area of resistance for those trying to like trade the swings, for example. Yeah, if you want to enter the market, then probably you put it just outside this range in order to just capture the trend. If you are doing the swing trading, within or mean reversion trading within this narrow band, they will probably look at the hourly chart, yeah, and probably put them down below here. So there was a thick area of resistance happening. So, but what happened? I'll remove these just for clarity, and I'll just leave one on, and that is this one here, because it's the first one. Okay, so within this range, neutral. What did I put on? I put on these, where are we? Oh, there you go. Okay, cool. To mark, I put on these errors, so higher highs, higher lows, and then I said probably a little bit of a sideways swing continuation until we eventually break higher. So, didn't happen. Did it? We did break lower for 1 day, and that was quite a panic session. I did remember talking to quite a few of you listeners in one-on-one conversations. So if you're up for a chat, I'm always up for it. So contact me on LinkedIn to get my phone number as well. Always happy to help out. Gap lower, very dramatic. Australian strikes are probably not happening. So the whole reason for the market going up in the first place evaporated. So there was a stark downwards correction. This, however, was probably an overreaction in itself. These things are usually not sustainable. What you can see, we did form a little bit of a hammer. Yeah, hammers form at the bottom of a trend, and they show that the market tried to push lower all session long, but they didn't, and they ended up back here. So this is a little bit of a mini hammer. Now the question is, are we going to close this gap? Would this here be a good level to target for resistance? Potentially. So gaps, especially these ones, they are filled. Filled means so there's a price vacuum here, so the price then usually retraces back to it because there's no resistance inside. Once we're at this point here, the question is, okay, so what will happen next? Was this just a little bit of a blip? So for me, to identify if something is a blip or not, I like to have a rule in place that either says I want 2 consecutive closes below the key level, we only had one, or a 3% decline below the key level, so it's 33.68 minus 3%. Let's do this live. Okay, let's put on the calculator. 33.68 minus 3%. So 32.66. Where did we close? Yeah, we closed well below that, so that would be a bearish close, a confirmed close. So this here really truly depends on what your risk appetite is. A third version is we break below some level, and then we want to see like somewhat of a retracement before we kick off a new trend. This doesn't really apply here. I don't really think that's valid. So here now the question for you is, how do you define a valid break? 2 consecutive closes or 3%, or do you have something else like, I don't know, 1 ATR or 2 ATR below it? Entirely up to you. But what I see here is that the stochastic is somewhat recovering, and we are on our way to close the gap. So I am wondering if this here is not actually really being closed. So I think that chances are not, it wouldn't be too crazy for this to close. Then this level here becomes more or less irrelevant, so I close it, and rather I'm putting on this because now this is an important area of potential support. So what I said earlier last week was I really want to see whether I'm going like bullish or bearish. This year seemed unsustainable, so what I wanted to see was a close past the high or the low of this candle, of this potential hammer, in order to make a call. We are above it, so for intraday there's a little bit to go probably until 36.78, so that wouldn't be completely crazy, I would say. Okay, so what's happening, Marcello? Is that trend over because you broke lower, or what's going on here? So as we entered the sideways range, I turned neutral, and I wouldn't have gone bearish here, and I definitely wouldn't go bullish here. So in my case, for the daily chart, looking out a couple of weeks, I would still not trade the market. And that is what systematic trading or technical trading helps us with. It helps us to just sit on our hands for just a little bit longer. But here's the thing, I do understand that your trading manager probably isn't tolerating you not trading for, 3 weeks now, So you can take advantage of these intraday swings. And for those, I would prefer probably a mean reversion strategy for the near term. Not so much a trend following strategy as it is the case for the daily or weekly chart. Okay, what are my thoughts? I think we'll probably try to close this here, and beyond that, I don't know either. Nobody does, but I probably would go bullish soon as we push above this range, and I would probably undo my neutral stance towards bearishness if we close below S1. Why? Because I'm going with market structure, so we have higher highs and higher lows. Good. So when are those not happening anymore? As soon as we start having, boom, a lower, lower lows here and lower highs here. But we need to see that happening first, right? So I'm a little bit conservative. I'm happy to miss out on some gains for some profits for any short selling, yeah. And I'm happy to be a little bit late on the gains train as well, because we still have, like, if we break higher, there's still a 10 euro gap that I could profit from. The only thing that worries me is something that could look like a double top on the hourly chart. Make sense? Cool. All right. So what do I put in so we don't forget for next week? Fairly simply, I will just remind myself that, yes, I am still acting in line with the higher highs and higher lows. Now I do believe that we will go until here probably, and I would go bullish above here, and I would probably undo my neutral stance if we were to break below this level. So I'm just putting in these two here, like this, so we all remember. Okay, cool. Let's have a look at Brent. Okay, so Brent is working out just fine. We do have higher highs and higher lows. If we zoom out, do you remember we have this like 1 year of a sideways trend, then we shifted lower, and then we broke higher. And those following me for some time, you notice that we did call this move, and then we went further bullish here, piling onto this, bam, bam. Always old resistance turns into support. Old resistance turns into support. That's always a good sign for the bulls. And now we are a little bit in a sideways trend, as I thought last week. Just extending this a little bit. And here, can you see, I said there's a strong level of support happening with many options for people to buy in. So this is or levels, which are all more or less subjective, but they all have the same anchor area. So I wasn't too worried when we broke below this here, because I do see that all of this is the area of support. And it did holds very nicely. So now the idea is for the market to swing within the sideways trend, maybe a little bit of an uptick, because we did get a bullish signal on stochastic. Now that we're entering a little bit of a sideways trend, the MACD is pulling lower, so we will only get a bearish signal if we move below the zero line. And if that would be accompanied by a push, by a confident push, back below the 200-day exponential moving average, which is also this thick support area, then I would go bearish, or at least undo my bullish stance. I would probably liquidate my bullish position, what I still have, and then probably if we alternatively, if we continue to swing higher, there's a chance that we will move higher overall. But my bullish stance is softening. And here's the thing, let's have a look at the next big target. So the next big target is here. There you go. Yeah, we'll turn that into red because probably offers resistance. What would this be? R2 probably. So in order for me not to turn this into a nail biter, if I've had a position open here, we have made it all the way until here, I think gains were good, depending on everyone's individual situation. Yeah, maybe if you entered here and now you want to close out here, that wouldn't make any sense for you. But if you captured the leg sufficiently and you're happy with your gains, as if we ever would, right? Then I would suggest maybe waiting for this to maybe move higher a little bit, maybe close out, and then just let this play out, because yeah, I don't know, maybe you could play the smaller boundaries here, yeah, on an intraday basis, definitely. But chances of the uptrend ending are increasing as this potential rectangle forms. And I would be okay to close this out and simply go back in at, I don't know, 89 here. Because then we still have like a good $10 to gain if we are to break higher, but I wouldn't lose sleep if we are pushing lower and I'm still long. That is what someone might do. Not trading advice. Okay, cool. So wait, before we move on, okay, so what is my thought? near-term uptrend in place, going a little bit sideways in the very near term. There might be a chance to trade the intraday swings. If I'm happy with my gains already, if I got in early, I would consider maybe closing out here just to make sure we've got the gains locked in, and then you can go long again here, so I don't lose sleep. And yeah, this is probably what could happen. Overall, we are still bullish. Why are we still bullish? Because the trend is in place until it is not, and we are still fairly good. Only thing that's worrying me truly is the MACD. A break below 0 accompanied by a break below 82 area would worry me. For now, at the start of this week, there's greater chances for us to push a little bit higher because we did end with a green candle and we do have a bullish stochastic. Cool. Let's have a look at carbon. Let's have a look at the weekly chart first. So, very long-term uptrend. I left my name in here just in case you want to find me on LinkedIn, so please do contact me. Always happy to help, always happy to connect. Always fun to connect to colleagues in the industry. Okay, so we have then this triangle that's been going on since Feb 2022, so it's also a long-term triangle. And within this triangle, we are now in this descending channel. So looking at the daily chart, maybe we should give these different colors. This is getting very, very quickly very disorientating. Okay, so let's give this a different color. There you go. Perfect. Okay, cool. So we are within this descending channel. We did have a false breakout once, but now we're still making it. Do not use longer term moving averages in a sideways trend. That also goes for tools that are based on moving averages like Ichimoku clouds. They're useless right now, and so are any outright signals from the MACD. If they are part of a bigger trading system, yes, fine, but just on their own for now, probably not so much. As you can see, in those more or less, I mean, we are shifting lower, but not really. Yeah. So here, this pattern is very subjective. So if I just say, okay, I just put in a support level here, or here, then we can just call this a breakout as well, and we can call this here a sideways trend. So this here is up to the. This is where the subjectivity of technical analysis comes in, especially with charting. So these tools here are a little bit more objective than charting sometimes, and this is one of those times. The important thing is to be able to be honest with yourself and identify that you probably don't know you don't have the ultimate truth. Yeah. Okay, cool. So ultimately still swinging lower, but less so. So not using MACD. Instead, I'm looking at oscillators, preferably the stochastic oscillator because it gives us actual signals. If we were used to the RSI, we rarely go into overbought or oversold signals, so I have found the RSI to be not so useful in European energy markets at all, so I'm going with the stochastic. In your toolbox, you might have the option to have a fast or a slow stochastic. In this specific case, I would probably go with a fast stochastic. Okay, cool. So what's happening? This was from last week, and we have topped out and we are moving lower. So I'm just adjusting that. So just the time was a little bit off. We did get a good bearish signal here, very nice. But now this here is happening. After two very strong loss days, we have a little bit of moderation. That is normal. That happens. Ultimately, we also have some hinging on the stochastic, but the idea is to ultimately still hit this support level probably, which also coincides with the lower triangle boundary. Okay, so ultimately, medium-term downtrend, I would call this. Near term, we've got these swings. We are in a downtrend still towards here. If this candle and this reversal indication, it's not a signal, it's an indication, are to be believed, then there's a chance for the market to bounce early this Monday. But I kind of want to see how the morning is playing out. Yeah, so I wouldn't really trade on the first couple of minutes, the first of the day. I really want to wait for the daily close on Monday in order to make a call of whether or not we are pushing higher again or lower. But here again, the trend is in place until it's not, and for now we are swinging obviously lower. So yeah, that is it. That is the markets for the week ahead potentially. Once again, stay vigilant. Nobody has the ultimate truth. We're all just it's all just educated guesses for technical and fundamental analysis. Will be an interesting week ahead. I mean, we've got quite some stuff coming up here. Yeah. So stay safe out there. Have a good week. Bye bye.